Hi everyone, coming in live from Token2049 Singapore, and we have with us a really interesting guest on VoiceOfCrypto today. We have Nathan Chan. Hi Nathan, it's really a pleasure to have you on our podcast.
Yeah, thank you for having me.
How are you doing?
Good. Happy to be here. Token2049 is obviously one of the biggest crypto conferences every year. So always good to see other projects, see what people are building, and just like kind of immerse myself in the community as well.
Absolutely. Can you talk a little bit about your role at your organization?
Yeah. So my name's Nathan. I'm the marketing lead at dYdX. So basically managing comms, social media, campaigns, and just generally making sure the community as a whole is aware of what we're building, timelines, and what our product offering is.
Absolutely. So blockchain technology has evolved quite a bit in the last couple of years, and we are expecting another evolution, the evolution to continue in the next coming years as well. What are some of the things about this technology that make you most excited?
I think what's particularly interesting about blockchain and infrastructure is just what it enables users to accomplish that we could not do before. So increased transparency, the ability to trade with anonymity, and access to financial opportunity that previously was not as accessible for many people in global jurisdictions. So coming from the US where dYdX trading is based, even though dYdX doesn't operate within the US, there's many countries outside of the US where it's really hard to access financial services or opportunity. So crypto as a whole just kind of enables that opportunity when that wasn't available before.
Absolutely. You rightly mentioned that there is a bit of tension in terms of regulation in the US. However, dYdX still works out in the United States. So how do you strike a balance between the regulators and the consumer base? Do you face challenges? I'm sure there are a lot of challenges. If you could just list out a few challenges in terms of regulations or compliance, and how do you strike a balance as a firm between them?
Yeah, so definitely. So dYdX trading is based out of the US. We believe that the US just has very strong engineering and building talent. But we technically just export financial services abroad because we don't operate within the US. One thing that is pretty clear is that crypto derivatives are not like a service that you can really offer within the US's borders. But that being said, crypto is a very global market. So even though we don't operate within the US, like Singapore, Southeast Asia as a whole, India, Japan, like those are very big markets for us. So we've just been fine operating without offering services within the US domestically. That being said, dYdX hired a head of policy within the last year that is based out of Washington, D.C. So he speaks regularly with politicians and regulators. At this point, a lot of our regulators understand that there's been an issue with FTX, for example, in the past year, where there are needs for consumer protections, but they also need to understand exactly what blockchain technology means and what it enables and what these services actually exist for. So right now we're very much so in the educational stage of explaining to them, hey, these are what centralized exchanges are. This is what DeFi is. Here's what we've built. Here's what our users use our services for. And on balance, I think many US regulators are very cognizant of the fact that we need to come up with some sort of overarching structure that makes it very clear what compliance looks like. So we're meeting with them in good faith to kind of reach mutual consensus on what that actually looks like so that these firms can be successful operating within the US in the future.
Absolutely. So, if I'm not wrong, you do quite a bit of marketing for dYdX, marketing, advertising. When events such as FTX take place, there is a sort of negative narrative around cryptocurrencies, crypto trading, be it derivatives or the spot market. How do you sort of bypass that and curate the right kind of marketing strategies for Web3 business in such challenging times?
Yeah, definitely. I think especially for just general retail users, when they see a fiasco like FTX, it's very concerning because why would I want to put my money in these speculative assets if my money just kind of evaporates overnight? That being said, as a DeFi protocol like dYdX, this was actually a very good opportunity for us because the underlying issues that led to the implosion are directly answered by decentralized finance. So at dYdX, for example, we're not custodian. So even if you're trading on our platform, because of smart contracts, all of your funds remain in your wallet. So there's no risk, even if dYdX trading shut down tomorrow. Your money is safe because we never held custody over it in the first place. So that's something that directly answers that concern. Also, with the new protocol that we're shipping within the next 2 months, before the open source software that we've developed is open source, which means you can audit everything in real time. So as opposed to depending on a centralized entity or authority like in SBF to kind of dictate what's happening, everything's decentralized, open source. You can audit our code in real time if you want to, and you can actually transparently see exactly what the money is at all times. So that kind of directly answers those concerns that users might have. But at the same time, I think overall the industry is definitely at a point where over the past year we've had lots of innovation, and it's on us as an industry collectively to kind of answer those concerns and explain to them very clearly, like, this is why the tech that we built and the protocols that we built actually enable us to avoid these issues in the future and to just provide increased transparency to regulators and users across the board.
Absolutely. For users, especially, privacy and security still remains a concern, looking at the number of scams and crimes that are still happening in the crypto space. So how does a firm like dYdX address that, keeping user safety as a priority?
Yeah, so definitely, like, something that we try to encourage to all users is the narrative of not your keys, not your crypto. So make sure that you always protect your wallet, make sure that you're not sharing your private keys with anybody, and to practice due diligence to make sure you know where your funds are. So currently, dYdX v3 runs on Starkware, which is an L2 on Ethereum. The smart contract code is auditable in real time. So technically, you can check exactly what's going on whenever you want to. You don't have to rely on something like proof of reserves from a centralized exchange that tells you, oh, this wallet address has X amount of funds, when you don't really know what that means. For us, since everything is auditable, you go on Etherscan, look up the dYdX smart contract, you can check it. With V4 in general, I think it's also just even more transparency than we've had before, and dYdX trading will no longer be behind the scenes kind of running the exchange. Instead, the validators and nodes, everything will be third party. The software will be open source. So what this enables everyone to do is you don't have to trust us, trust our code. Check the code, actually trust whoever you're staking with as a validator. And you can do all that in a way that you empower yourself to protect your funds, because we're non-custodial, you can control where your money is and you can see where it is in real time.
Absolutely. Talking about derivatives trading, it's still not gone mainstream for cryptocurrencies, and yet dYdX is sort of leading the front. So how do you envision the future for this sector, and do you think that dYdX will sort of be a leader in terms of bringing derivatives trading mainstream?
Yeah, so obviously I'm biased working at dYdX, where I believe that is the case. In general, I think over the past 5 years, we've seen an explosion in derivatives growth. And that's not just because of increased leverage, but when you can trade synthetic assets as opposed to spot assets, you're not constrained by the physical quantity of assets that are liquidly available. So, for example, Bitcoin as a whole, there's a finite amount of it, but also some people are holding them. You can't actively trade them. So with synthetic assets, it enables institutions or pro-retail traders to kind of trade more than they can access at any given time. In addition, I think in general, this goes for TradFi markets too. You always have your stock underlying that exists, but the derivatives market is always orders of magnitude bigger than the actual stock or spot market itself. And that's definitely the case for crypto now too. The derivatives market is expanding very quickly, and we've seen even more and more institutional buying as well. So compared to 5-10 years ago, the number of quant firms, high frequency trading firms, market makers has increased exponentially as the technology has kind of innovated and grown in potential as well. So throughput's increased across the board. DeFi has grown in terms of being a sustainable product that actually offers a valid product experience where you don't have huge latency issues. So we anticipate for sure that derivatives will continue to grow in popularity. Right now, obviously, overall, the macro situation is in a bit of a bear market. But especially once the bull market returns, we expect to see explosive growth as more retail starts to flow back into the markets, user confidence comes back. So really, it's just a question of continuing to build and give the best product experience as possible, and users will come in naturally.
Absolutely. Do you have any final words?
Yeah, I would just say within the next 2 months, you should expect to see dYdX before go live. Again, just to reiterate, dYdX trading will not be running dYdX before. It will all be run by third parties. So this will be the first time that a protocol or scale truly decentralizes. And we think that that's a huge value proposition for users in the wake of Celsius and FTX and all the issues that we've dealt with in the past year. So within the next 2 years, next 2 months rather, we're very excited to see how this product launch goes and to see what users feel about the product experience and to just keep building. In bear markets, I think the most important thing for protocols to focus on is just build. Keep your heads down and build and make sure that the product that you've built is best in class. And we feel very confident that the standalone dYdX chain is going to be a best in class product experience.
Absolutely. Really excited for this launch and hope you and the team all the very best for this amazing thing that's coming up.
Yeah.